And each Thursday, a chance to visit with our friend Robin across from StoneX and giving us a look at the lumber trade. Boy, back in the days of the COVID and all the supply chain, boy, that was the headline news. I'm not sure about today, Robin, but we're going to hand it over to you.
Morning, Mark. It's very nice meeting you, and I look forward to many broadcasts together. Yes. So lumber, first of all, before we get into it, let's get into some prices. May lumber just opened, $5.20 even. That's actually a new low, and we're down 50 cents on the day, not too much. July lumber is trading at $5.44 even, which is down $1.50 over there. So, a little light volume on the open, but, we really put this thing through the ringer over the last 4 weeks. The lumber future price erosion continues. On March 12th, May lumber rallied to the 2-year high, which is also key resistance, of $625. And the market sat there for a few days at the high, only to fail, literally miserably. Kicking off the biggest decrease in price since the May contract actually of last year. Lumber prices fell, and counting, for a month straight, losing roughly about 25% of its value for a loss of about $105 from the high. So the market has gone down for the last 19 of 25 trading days. The last time lumber traded at these levels was just before January expiration. On January 12th, when we saw a quick swing low down to $523, which ultimately ended up rallying the very next day, but it was just a quick spike low. So, the real question mark is why did we break?
Yeah.
First, we have to look at the rally at the highs. At $625, futures were a big premium to cash, to the tune of about $50. And for the last 16 months, the best average premium you've got is about 40, so it was a little extra than what it probably deserved. And the reason you get all that buying at this time is because of increased spring, consumption enthusiasm. But during that period, trading at the highs, and enthusiasm began to wane. The realization that we weren't going to get any relief on interest rates really kind of kicked into this market. I remember the famous last words. The Fed chair, Jay Powell, stated, inflation data shows, and I quote, lack of progress. So traders began to take profit, which really kicked off the slide. And then on top of that, this week's housing data we had, and I'll just give you a couple numbers. Housing starts came out down 14.7% at 1.3 million when they were expecting just a touch under, right? Permits, which is future business, came down 4.3%. And then consumption was down 13.5%. So it was really a big miss on that report. So that kind of was the dagger into the rest of the market. So it was really much weaker than expected, and that fueled further downside. So what now? I mean, the market is currently technically oversold. Both May and July are oversold, which is unusual. We're also a discount to the cash market. Random Lengths reported cash trading around $533 delivered Chicago. Not much of a discount, but on the initial break, we were a good $30, $40 discount to begin. And this is the first time you saw a discount to the cash market since October. I mean, this whole year, guys were pretty, I would say, optimistic. They thought we kind of went through the ringer already with interest rates that we were going to get some relief, but now that's pretty obvious that's not going to happen. I think that guys are looking for another way to probably generate some loot in here. I think secondary market, the rehabilitation side of things will keep things going. And don't forget, in history, we are very underbuilt in housing. I mean, very underbuilt. You're sitting at roughly 3.1 month supply of homes. That's half of normal, low side average. Low side of the average is about 6 months. So we're way underbuilt, but until interest rates kind of cool out, I don't see any big change on that. But I do think that the board being so down and so oversold, guys should look to cover in here in lieu of owning the cash. It's much easier to get out of futures than it is product in the streets. But other than that, I don't want to say it's over. We're going to take out the lows, anything further like that. But just be prepared either way. But it is definitely oversold.
You have prepared us in a big way here today, Robin. I was looking forward to visiting with you. And wow, great information. I had half a page of notes here. So we will check in with you next week. Robin Cross from StoneX. And we'll take a break. We'll come back and get you caught up in the grain and the livestock trade as we continue Market Day Report on a Thursday.